Let's expand on that headline because the Reserve Bank's Monetary Policy Committee is expected to announce another interest rate hike this afternoon. Now, if the Reserve Bank does indeed raise the interest rate with the expected 25 basis points, it will take the repo rate to 7.5% and the prime lending rate to 11%. The MPC will also announce its latest economic growth forecast, which has been continuously decreased rather. Sort of know what this means for you and I, but let's get into it with Chifipa Mhango, Chief Economist at the Consultancy Group. Thank you very much for your time this afternoon. Is it obvious to you which way the Reserve Bank will go when it comes to this latest interest rate hike?
Thank you very much for having us. Indeed, we are factoring at least 25 basis points in terms of interest rates hike today. Obviously, I think a number of factors are really coming into play with regard to how the inflation environment, the pressure that exists in the domestic economy, are really going to direct the Reserve Bank in terms of taking this position in terms of hiking interest rates today.
So you're expecting a 25 basis points increase. What is it that we are seeing in terms of other countries on their continent with their monetary policies?
Well, it's a similar trend, I think obviously driven in by inflationary pressures across the continent as well. But not only on the African continent, but I think we're also seeing a similar pattern also in Europe as well as the US market. For instance, just a week ago, the US actually also increased the lending rates quite significantly. And that's a trend which has actually been happening within the US economy. Obviously trying to contain inflation in that economy where the target range of 2% has actually been where the current inflation environment there is actually way above the target of 2%. So also the similar pattern of also seeing the European Central Bank also hiking interest rates in the European monetary policy environment. So obviously really the pressures of inflation are really what are causing all these reserve banks across the globe to actually hike interest rates.
The World Bank has shaved South Africa's prospects of economic growth. How should we understand this in line with what the Reserve Bank is forecasting?
Well, it's a similar pattern. I think our projection in terms of the GDP for this year is more driven by the domestic factors such as the road shedding we're experiencing in the economy, the logistical costs we are having in the economy. But at the same time, also the rail network, which is actually not conducive in terms of supporting the industrial base for the South African economy. So all these factors are really causing a knock in terms of how the GDP projection for the economy will actually be going forward. We've seen that knock, for instance, in the whole of this first quarter of the year. On a daily basis, we've had load shedding. So that is actually influencing the production base of the economy with regard, for example, the mining sector as well as the manufacturing sector, which are the key segments when it comes to the contribution to our GDP for the South African economy.
Chifipa, your word to consumers, since you are expecting that the repo rate will go up, a word of advice on how to stretch that rand to go a little bit longer.
Well, advice in an environment where there's high unemployment becomes a bit difficult to do because obviously it's also an issue where some people don't even have income to support their families. But I think from the consumer point of view, those that have got at least a little bit of income, it's now a question of looking at how best you align your budget. For example, if you've got car loans, repayments, bonds, repayments, obviously that will factor in terms of the monthly cost going forward. So that actually will require that restructuring in terms of the expenditure pattern from the consumer perspective.
Thank you very much to Chifipa Mhango, Chief Economist at Consultancy Group.